Thank you, Dieter. We're going to start the panel now. We've got a few questions and topics I think that will be good for the panel to answer. The first one I feel is on the EU ETS, as I mentioned, this Fit for 55 package. So how do we feel the Fit for 55 package would impact the shipping industry, and what do we think the EUA market can do to help mitigate some of that risk? James, maybe you'd like to take that one first.
Sure. So I think the speakers this morning set the scene pretty well, in that the IMO have the stated goal of achieving a 50% reduction in maritime emissions by 2050. But as Abhishek said right at the very beginning, that goal doesn't align with the Paris Agreement, and the current regulations aren't enough to get us there. So in light of that regulatory void, the EU has stepped in with its Fit for 55 policy package. It wants to reduce EU-wide emissions by 55% by 2030 relative to 1990 levels. And the ETS, as you explained earlier, is a flagship decarbonisation programme for the EU. The European Union allowance for EUA increased in price by 146% last year, and that's engendered through the tightening of supply via a number of mechanisms. Crucially, in June, we saw the proposal to incorporate shipping into the ETS, a key element of which was that the ship owner, or the ISM code holder, bears ultimate responsibility for surrendering allowances. Now, it's worth bearing in mind that this isn't in force yet. This is due to be voted on in June at the earliest. Perhaps it might be delayed by a year, but it's worth noting that the EU doesn't look like it's backing down. If anything, it's getting more hawkish. Peter Lees, who's a rapporteur on ETS reform, has proposed accelerating the phase-in period and putting a carbon price on 100% of emissions inbound and outbound the EU, rather than just 50% as was originally proposed. So we think it's worth treating June as a base case scenario, those June proposals. One way to effectively manage this is to get on board with it and realise it's not going away. Sadly, EU firmly has decarbonisation and shipping in its plans, with a carbon price at the moment of about 80 euros per tonne, as opposed to the $10 per tonne we're seeing in the nature-based offsets. So reviewing charter parties now, engaging in the EUA market, understanding how the European carbon price interacts with the European energy complex is crucial. And rallying against this, I think, in my estimation, is a wasted effort. Now, although this is a regional regulation, it's going to have a serious impact on financing and operations. For example, a non-eco MR performing a cross-med voyage is going to entail a carbon cost of about $5,000 per day, roughly 50% of the one-year TC rate. So this is going to entail a lot of back-office work, especially accounting and digital capabilities. And again, I want to stress that the final responsibility for this looks like it will lie with the ship owner. It doesn't seem as if the EU will change its tack on that. The owner should look to recover the cost of carbon through means of contractual arrangement. Obviously, that's easier said than done. We've got to think about issues such as triangulation, who's going to take charge of the ballast leg. That will require a detailed examination, but crucially, market engagement. In my experience, I've seen a number of creative drafts that look to deal with the cost of carbon. Some work, some don't. I think it's fair to say that I don't think the P&I clubs or the owners' associations yet have a strong handle on how this is going to work in practice. But the key is not to ignore it, not to wait for a solution. The key is to get involved now, start building carbon trading responsibilities, start understanding the market. And crucially, because the EUA is a floating price, I think these allowances need to be transferred physically. If you're transferring cash for carbon, someone's going to fall on the wrong side of that, because as we explained earlier, this is a market designed to appreciate in price. Finally, I just think this should be viewed as a commercial opportunity, not a tax. I think those who are bold and are ready to move early will be rewarded. But the opportunity for making margin is clear. I think the ETS is serious, the EUA is a serious price, and whether there's a delay or not, we don't know, but this isn't going away.
Yeah, I would agree with that, James, and I think especially the fact that acting early is better than waiting, that this will happen, that the EU is very strong about its ETS. I don't know if anyone else on the panel has any views they'd like to add at this stage.
Yeah, maybe a comment from me then, that to say that clearly it's going to be no free allocation. So it's basically a market, it's a very liquid market, it's a very volatile market. So I agree with James that, we have to be prepared and we have to consider this as quite a substantial impact financially to the business.
Okay, and just on that then, I mean, how will the EU ETS help with decarbonisation? Emma, maybe do you want to just touch on that?
Yeah, sure. So obviously, fundamentally, it will put a price on carbon. So whatever carbon you emit within the realms of the market, you have to pay the price of that. And the way we consider the ETS impact in Maersk is that, of course, we look at the overall financial impact, but we also consider the fuel price delta. So what is the fuel price delta between conventional fuels and green fuels? And of course, when you burn a ton of fuel oil, you emit 3 tons of CO2. So that means that for every ton of fuel oil you burn within the EU ETS, you have to buy 3 EUAs to cover for the carbon liability. As James just pointed out, current market prices is about 80 euros a ton, which means that you increase your fuel cost by about $250 a ton. So that's about, in a normal market environment, 50% increase. And of course, if you burn green fuels instead, you don't have this additional cost. So I think this is definitely a way of supporting the fuel cost delta. And it goes some way, but it's not fully closing the gap. But at least the EU is leading by example here. And within Maersk, we've set very ambitious decarb targets. So we aim to be net zero by 2040. And by 2030, we want 25% of our ocean business to be running on green fuels. And how do we do that then? Of course, we're investing ourselves. So we're investing in green methanol vessels. So far, we've committed to buying 13 vessels, with the first one coming online already next year. And the large ocean-going vessels starting to be delivered in Q1 24. And then, of course, the fuel side, as we also heard earlier, is a key challenge. And last month, we announced 6 strategic partnerships where we joined forces with global partners, where we're really accelerating the green fuel production of green methanol. And what we do is that, we invest as Maersk, so we commit our offtake so that these products can become bankable and they can start producing green fuels. And this happened a month ago, and since then we've had a lot of interest from other players as well who are entering this market. So I think that, there's definitely a message here to say that if you want to buy green fuel and green methanol in particular, join the market. We'll have more supply come to the market, and then prices will eventually come down, and we can sort of fully close this price gap. And then we're also working very closely with our customers. So we see very strong customer demand. We have a product called Eco Delivery, which is where we sell green freight. And here we have seen enormous interest. Of course, a lot of our big customers are also committing to net zero targets. So they have an obligation to sort of decarb their supply chains. And of course, this is where we see we can sort of support them in driving this agenda forward. So I think to conclude, it's, we don't just see it as a risk and as a cost, it's also an opportunity. Because ultimately, if you're bullish carbon prices, which I think most of us are, then it's in your best interest to decarbonize sooner rather than later.
Yeah, I would completely agree with that, and I think that's what one of the things the market does by pushing up the price through the supply and demand mechanism. It allows you to value where the new technology is and how that can impact your bottom line. But what's interesting is, as James mentioned, this is still being debated in the EU. It will probably be delayed due to current situations, but we do expect that shipping to come in. But we've been there before. We had the airline industry involved in the UAE market. There were some discussions, and we had a bit of a change. So the airline industry was able to modify the initial instruction from the EU, and that came to the voluntary carbon market. So I think, James, you've had some experience of that, of the Corsia, how they agreed that they could include some form of voluntary to offset some of their EUA needs.
Yeah, absolutely. The Corsia is a scheme that is applied to the aviation sector. The relevance to this discussion today is that the aviation sector is a non-static business, a little bit like shipping. So comparing and contrasting with the two is quite a relevant thing to do. The aviation sector has been affected by legislation regarding decarbonisation since about 2012. So lessons have been learnt in that, and one area that was created for the specific purposes of aviation was to look at the voluntary carbon markets and make certain types of project eligible for CORSIA, so not all voluntary market offsets. Now, the thing with the voluntary markets is that a lot of organisations here today will be impacted by EU ETS, but that is only an element of your total carbon emissions. And the voluntary market is something that takes you to the wider, more global sphere. The idea of using credits that are specifically eligible in the same way that CORSIA works does not actually, in my view, make a lot of sense. Ultimately, the most important thing with voluntary markets is to make sure you're finding the right offsets from the right projects. There are, as you saw from Faraz's slide, there are an awful lot of different types of offsets in the voluntary carbon market. And I think you have to be careful, and you need to take good advice from people about where you invest your, or make your investments, whether that be at project level or whether that be purchasing offsets. And finally, I would say, we talk about the voluntary market. We were talking about this in the business the other day. Voluntary is a term that's been used for quite a while, but I would not really call these markets voluntary anymore. I think you need to be thinking about this as an obligation almost, and something that you should be considering across the business.
Yeah, I think that's a fair point. Definitely with these net zero targets that companies and clients are coming out with, it's very important to be part of that market. And we've seen it actually with the LNG market, which is the other side I look at, where you have carbon neutral delivery of cargoes. I think that will continue to increase into the whole commodity space, and it makes that voluntary market very important to manage that. But again, on the voluntary, so we've talked about EUA, how that could potentially help high prices allow companies to look at different investments. But with the voluntary, being the prices are fairly low still, do we think that they would assist in this decarbonisation? Belinda, do you want to just touch on that, given the presentation that Adi did?
Yes, sure. Thanks, Faraz. So I'll probably pick up on a couple of the points that Aditya made in his presentation about green screen. But certainly, we are already seeing carbon credits make a contribution to decarbonisation today. This is not totally new. As Aditya mentioned in his presentation, AkzoNobel started by originating carbon credits, say 6 or 7 years ago, with their premium coatings. So that's something which is already in place. We're already seeing a few initiatives, shipping initiatives, that are underway this year. So we're expecting to see that. And if we look at, we're running this green screen program with various owners, in fact, some of the leading owners that are with us today. And if we look at the first round of owners that we're working with, we will actually, they're on course to save 50,000 tons of carbon a year, starting from a year or so from now. So we're already seeing this making a difference. But if you look at it more broadly, shipping is responsible for nearly 3% of the world's emissions. There's a huge amount of pressure on shipping to make a difference. There's a huge amount from all sides of pressure on not just the owners, but for banks. Their boards are putting pressure on them. Banks are putting pressure on owners. We've got regulators, policymakers. But unfortunately, a lot of that, or whatever, a lot of that pressure falls on the shoulders of the ship owners. And I think Abhishek said at the beginning that 60% of owners really fall under the category of small to medium enterprises. It's really difficult because there are only a few options available to owners. And for very large players, of course, and leading owners, they can lead the way with the new technologies, and this is extremely important. But for other owners, those premium options are very expensive and quite risky. So they will have to look elsewhere, and they can make a difference with operational change, but there's probably a limit to how much that will make a difference at this stage because the ships are already very efficient. So the other option is that many of the owners that we've been speaking to, and many of the most progressive owners, are looking at retrofits because they see this as a way to prolong the life of their existing fleet, which already has an impact because the new building process is very carbon intensive. So to prolong the life of the fleet with a superior performance because of the retrofit makes a big difference. And going back to Aditya's presentation, what he illustrated is that with the green screen approach, the breakthrough that has been made is that the data requirements and the process is much more manageable, practical, and low cost now to open up access to the carbon credit markets for ship owners who are planning to install retrofits. And it's an encouragement, it's an incentive. It's designed to be an incentive for owners to really aim for above average performance. Just doing the industry standard practice is not going to be good enough. In order to qualify for the gold standard carbon credits, you will have to demonstrate above average performance. You have to demonstrate a commitment to sustainability, a very strong commitment to decarbonization, and then you can open up a new revenue stream, which really helps with these very expensive retrofits. And that revenue stream, in the context of what we've all said is likely to be rising prices, this is likely to be very profitable for owners. So it's really, we feel it's helpful for the shipping industry. It's not everything. Nothing is going to substitute for direct emissions reduction, which of course owners and charterers have to make. But it is part of the process and it plays an important role. So yes, carbon credits, we believe, are already making a contribution.
Yes, and that's very much the view of Standard Chartered as well. We think, you know, again, as I said in the presentation, that this, to me, is not the end of the story. You can't just go out and buy carbon credits and continue to pollute. It's about transitioning. It's about being able to reduce your carbon now, having an impact now, supporting projects, receiving those allowances. And then the key aim is to decarbonize, and that's across all the industries that are going to be covered by this. So, yeah, I think that's been a really good debate. I don't know if there was any other points anyone wanted to raise before we come to the end here.
I was just going to say, I think that the various regulatory markets and the voluntary markets are not going away. This is something that is going to impact all sectors, shipping being a key one. And I think, all businesses have to get on board, excuse the pun, this pathway to decarbonisation. And the sooner you start to think about it and the sooner you start to break it down into manageable processes throughout the business, the sooner you'll be the right side of your carbon decarbonisation road.
Absolutely. Kevin, I'm not sure if we have any time for questions.
Let me just see if there is there a question from the floor, please? Yes, sir.
Carbon had this incredible volatility in March. Can you just take us through and help us understand what took it down and what brought it back so fast?
Sorry, I missed the second bit. So carbon has a lot of volatility.
In March.
Oh, in March, what happened? Yeah, I think you have to sort of, I think James mentioned it, you have to look at carbon in the space of the energy markets in a whole. So what you had in March is obviously the Russian invasion into Ukraine. That led to a huge spike in commodity prices in general because Russia's a huge provider of that. The way the markets work are things such as margining calls, so there's a cash restriction on people, and this all led to a lot of, I would say, unusual events during March, and not just in the carbon markets, but in the energy markets and the metals markets. It was a unique environment. What I would point out, though, so I don't know if I can show the slide again, but actually we had this big drop in carbon, so we went from 90 down to 55 or 57. But you saw a big reaction back. So even during all this this environment that we're in with the very volatile markets, carbon found its support because, as we've all been saying, there's a natural demand out there. That demand won't go away. We know carbon won't go away. Sorry, it was a few on, I think, but yeah. Generally, it was just we saw support in the market. That market won't change. Voluntary is a slightly different issue. There's still a few. We're still trying to understand how the market will work. We've been talking about that now, and like I said, the ICVCM is hopefully going to produce some core carbon principles, and I think that will give a little more clarity as to which projects are the ones that the market should look to help decarbonise.
Thank you. Any other questions? There's time for one more. Yeah, final question, please. Thanks.
A question to James Boyle, about the tonnage tax, carbon tax. If owners haven't organised themselves for the deadline, do you see this as charterers capitalising on that and charging the owners for that, and thus making a profit, another profit? And the second part, will that segment the market into a two-tier, i.e. owners that have that in place so that charterers don't have to do that, or not?
Yeah, so with regards to your first question, what happens if ship owners don't have the allowances available? I certainly think there's a risk that ship owners, come the compliance deadline, those that aren't prepared realise, I've got to get my act together. And the charterers, some of which do have carbon trading capabilities, especially the oil and gas majors, they've been involved in this market since its inception, they're able to provide allowances, but not at the rate they're at now. The prediction is that European carbon will go above 100 euros per tonne. So you don't want to be buying carbon off a charterer that late in the day in 2024 when the first deadline hits. I apologize, what was the second question?
About a segment, would that cause a two-tier market or three-tier market?
Yeah, I think there is a risk. Well, one of the major limitations of the EU ETS is that it is just that. It is the EU ETS. And I think even without the complexities around surrendering allowances at the compliance deadline, we risk a two-tier market where efficient modern tonnage is steaming in the Med and older tonnage is pushed elsewhere. And I'm not sure how that would play out with freight rates, especially when you throw in the interaction of EEXI and CII. I think in the long term, that issue is dealt with by other emission trading systems, such as the national Chinese one that was started last year, a potential federal US one getting involved. I believe Joss spoke earlier about the UK ETS, and their initial proposal is to only include intra-UK voyages. But that raises a possibility that in the future we're going to have a number of different carbon pricing schemes, not only with different prices, but with different compliance deadlines, different compliance procedures, and that's, you know, a whole new headache for ship owners and charterers alike.
Okay, thank you very much, Faraz, and to the panel. Thank you for a great discussion. Thank you. We are now breaking for lunch. Lunch is served by reception out there, also on the balcony behind you, behind the curtains. And we will reconvene according to the agenda, please, at 1:45. Thank you.